As you can see on my screen, I am going to start this 50K observation. And I was kind of going through my head and thinking about whether I should always keep my markings. For example, this is still from Monday's levels. So I'm kind of wondering whether or not if I should keep the levels or remove them, or at least, be able to know which conditions. Like, let's say if the AM low was already taken and closed, the candle's closed through it, then we should remove it since, 1 day session is around like 4 lines, 4 levels. If we have that for, the past 4 days, that'd easily be 16 levels, and it gets kind of confusing. But what I think I'm going to do is most likely keep it for now. But just because I also want to combine it with the other. Because, for example, if on Monday, if the AM high was never taken, right, that's a very key level that price can likely go back into. And we're gonna have to keep that level for the next day, right? So for, let's say 3 days ahead, we got to keep that level because, or else we can't see where price or what price it's gonna go to. But what I did notice today was that at 8:30, right? Pretty sure we had CPI data come out, so we see price heavily coming down, right? Very interesting that it went pretty close to PM low, right? So PM low is 29,744.25. And the low of this candle is 29,745. So around 75.75 points or cents from touching that. That's pretty close, but I do like how the candles, everybody bought back up. Candles closed above afternoon range high, resulting to higher prices. Eventually we broke down, so we have a very small higher high that got broken, right? Very aggressively, comes back up into it. We had a sell side imbalance as well, and eventually breaks down lower, and now we're back up. We can see there was a lot of chop in between here. Same thing right here. So what I'm looking at is that we have this trend line going. We kind of flattened out, and now I want to see whether the last hour provides something for us. But at the same time, I do want to mark out today's levels, right? So we have 9:30 opening to 10 o'clock. We're going to remove this line, and we can see that 9:30, right? We have that opening up there. And we're going to use purple this time so we don't get mixed up. We're going to copy paste, make another line, and we're going to do the exact same thing. We're going to label the low. So AM low, right? And now we gotta put the date. AM low, or PM, not AM. I don't know why I put the low for this. It should be the high. Low. Okay. We we have to mark out our first presented fair value gap. Shade this a little bit lighter. Okay, so if we go a little bit closer into this, right? So right when the market opens, right? Initially we opened here. Price goes up a little bit, comes back down, closes right here. Second candle forms. Very fast drop in price, right? All the way down here, comes back up, closes. This third candle opens, price goes up a little bit, comes back down, and closes down here. So this second candle is our first presented fair value gap, since this candle is what leaves the gap. So it uses 3 candles, and we're only worried about the first 3 candles. Or it has to include 3 candles. And then we can see how price goes back into that first presented fair value gap. Obviously it goes above a premium level, so this is considered expensive. Price then comes back down to the AM low multiple times, right? Goes into the first presented fair value gap as well. And then now what we're going to do is the same exact thing, but on the PM session or the afternoon range. So we have 1:30 p.m. to 2 o'clock, and this is all Eastern Standard Time. So right here, I see that we have our high right here. Use pink this time, so we have PM high 8/12. Copy paste. See, this is our low right here. Right, and then we look for our first presented fair value gap. I can see that we have this right here. So now when I'm looking at price now, right, I can see that AM high has yet to be taken. So I see AM high has yet to be taken. We have AM low. First presented fair value gap got delivered. We had another imbalance here. They got touched, so that's balanced. We went down, right, all the way until around the lunch hour, actually. So the start of lunch hour, we can see that we created this reversal. And now this is where we build a strategy from scratch. All right, so how do we do that? Well, I think something that I would ask myself is, why would you want to enter the market? Why would you place a short at this price, or why would you place a long? Well, for me, what I'm thinking, I would place a long. Like if I were to go long and I was forced to, I would place a long because we have created this trend line, right? Even though it flattened out, I'm actually going to mark that. So even though we have marked out, so even though we have a trend line going on, we also have a flat line. So we're creating this upward trend line, but then we have stopped doing that. We have created now a flat, but then again, at the same time, we created another upward trend line. All right, so what I want to see now, what I want to see is if this created this flat line, does price still want to go up higher? So the last thing, what happened here, right? So we have this buy side inefficiency, right? So we have fair value gap, that's bullish, right? So we can see how price has been staying inside this. The bodies of the candles are staying inside of it, and now we're reacting higher. But what I want to see is whether PM, the high of the afternoon range, whether it acts as resistance. So if I see that price closes down below, or even breaks, you know, a recent higher high, that could tell me that, you know, price has broken structure. So what I want to see is price close down below here. And then we also have this potential inversion fair value gap, because it was once bullish, can now be bearish, right? Because it failed. So we're going to change this to an orange, right? So this is our first presented fair value gap. So we can mark out PM, 8:12 PM, first presented fair value gap. And now here would be the waiting game. So I guess in my notes that I will eventually have, right? So I'm just going to make a notepad. So we're going to mark out 12, 8:12. Excuse me. Placing a short. My gosh. One second. Let me turn off my alarm because that keeps on freaking scaring me. So placing a short if price rejects going higher above PM high of today's session, right? Waiting for the most recent bullish fair value gap to fail to turn into inversion fair value gap, waiting for price to close below recent higher high. That could potentially act as a break of structure, telling me that price is no longer in a SPY program, and vice versa. We're placing a stop just in case we're wrong. All right, so see that we have hit PM low again. So we can see that price is most likely going to close since 1 second left. And now what I want to see is whether it wants to go close above this PM low. All right, so I think I'm going to place a short for sure. We're going to put our stop here. Right, so we have, obviously we have our inversion fair value gap here. Right, this orange. Price comes back down, closes here. We have our another candle that closes here, another candle that closes here, we have this sell side inefficiency. So we have a fair value gap that's bearish. Right, so we can see how price never came back into it, but this is the candle that starts this first fair value gap right here. Right, so ideally if we were to come up back up into it to balance it out, we don't want to see price go above this, but just to be safe for me, I'm gonna go a little bit higher. We also have this right here, but you know, that's a very close stop, you know, $18.50 with the 50K funded is not that much. So I'm very comfortable risking $34. So now what we're gonna see is where should we place our take profit. And I see that we have relative equal lows, even though that's a different concept that I'm not necessarily using, but I do like seeing this, right? So our first objective could be the AM low. I really like these lows though. So I think we're going to target for that. So we placed our stop inside inversion fair value gap and above a sell side inefficiency imbalance. And above the last higher high. Price closed below PM low of this session. We are targeting below AM low that has already been taken out. There are relative equal lows below it. So ideally, if this was super bearish, these imbalances would be left alone, right? So price wouldn't even bother coming back up into it. That's if the market's telling you that, you know, like we really need to go down lower. Based on, you know, its own reasoning. So as you can see, we're hitting that first imbalance. I'm just gonna mark it out really quick. So we have an imbalance up here. We have one right here, and then we also have one right here. And we can see that price tagged up into it. Didn't even bother going halfway point, nor the top. So if it touches here and then just keeps on going lower, it could tell us that, you know, hey, we're trying to go lower. Doesn't have to, obviously. I guess we can label this higher high. And I think what I'm going to try to practice, if everything goes well, is moving my stop loss as price continues to do what it wants to do. So in my mind, I'm thinking like, what should price not do? Right? So if this were to continue selling lower, where would my strategy tell me, like, if we were to go above this price, this trade no longer is valid? Because I know most people would probably put their stop loss at break even or close to break even, maybe to cover their commission costs. But that doesn't allow the trade enough room to do its thing. So most of the time what happens is you prematurely close out your trade. Right, but a valid, stop loss could be that you lower it to the start of this imbalance. Could be that you don't really want to see price come to the top of this imbalance as well. Could be that you don't want to see this get tapped into it also. But I think we're just gonna keep this, not change it until we see a substantial like move lower. Then I will move it, but for now, not yet. That is not good. I don't know why my title didn't update. All right, so as you can see, like I said, if we were to move our stop here, we would have gotten taken out prematurely. I'm just writing down that we had 3 SIBIs, right? So we have first one, second one, third one, right? We're pretty much gaps where price shows either up or down really fast. So there's open space. Like on these candles, we can see that price overlaps and there's no gaps in here. There is a gap currently right here. Right, so we can see we went a little bit below the start of the gap. And if it were to respect this gap and keep on going higher, that could tell us that we're no longer in a sell program. This was like a short-lived sell program so far from what we're seeing. Doesn't mean that we're not anymore, but you know, when it starts disrespecting either side, it could tell you a clue. But what I'm writing down is that we have 3 sell side imbalances and that price reject, like it went overlapped the first or the last one, right? So the lowest one, but it did go up into the second one. So it overlapped the first one. It went to the second one twice now. The second time it took out, I want to say buy stops. Took out this. Or high in the second. Sell side imbalance, right? It has yet to go to the highest and first sell side imbalance in efficiency. So ideally now what I want to see whether we completely just reject from here. Right, so there's no imbalances in here. There is a volume imbalance, but price has gone above this candle's low. Right, so it's kind of coloring inside that and then maybe leaving it. So we do have around what, 49 minutes left. We still have an hour 48 minutes left, but since you know 1 o'clock is what really closes, you know, the volatility on that, all that. Let's say around like 48 minutes left. So what we really want to see is speed. Obviously in 48 minutes, I don't expect price to come back down all the way down here. But what I would at least want to see, you know, is AM low for today's. And if we keep on seeing progress going down into there, what we can do is just lower our stop to a place where price shouldn't really go down or come back above. So like I said, could be that this level right here really shouldn't go back up into it. But we also don't want to prematurely move our stop either. What we are going to do is at least cover commission costs for now. Right, because we already took out this high that we formed inside this sell side imbalance. Right, so not people, but traders, right? Initially, they probably put their, let's say we were to enter a short here. Immediately when we saw this first drop down, I know for sure, for a fact, I would probably put my stop. Well, maybe not now, but if we were to drop and I entered here around this area, I'd probably put my stop at this high, right? So the market will want to go and take out the stops. And I already did it once, right? We took out stops once. I personally highly doubt it that it's going to want to do it again. I could be completely wrong, but that's just what I think, right? So we could have our stop here. But I expect price to just keep dropping lower. But like, I've always had a problem of prematurely moving my stop, and that would cause me to literally place my stop and think I'm safe. And then what tends to happen is that price comes back into my stop loss and I get stopped out. And then I would have to enter again. And when I enter again, it would cause me to enter at a price that I didn't really want to. I just want to get back in the trade. And that causes over trading, obviously. Not a good thing. Ideally, what we want is just a one trade setup, right? Put your stop loss, don't move it prematurely, because if you do, you're going to get taken out, and then you enter again, and it could be that price reverses on you, and you lose all your profit for the day, which is obviously not good. We can see that price pierced into this imbalance as well. Ideally, we want to see it close below it. We don't really want to see it go past above this, the halfway point. Yeah, I think I'm just gonna put my stop back to original place and not touch it anymore. No more touching my stop loss. I think that's what I'm gonna really take a note of. So I'm gonna put 3 stars. Do not move stop loss prematurely. Right? Either it hits TP or it hits stop loss. And the reason I'm writing that is because why am I writing that? So I don't want to move my stop loss prematurely. So most likely it hits my stop loss and I have to enter the market again and overtrade. Stick to your original plan. Right, so if if I still had my stop loss right here at this candle's high, I'd for sure probably like be super anxious, just, you know, thinking like, oh my gosh, you know, it's just more stress that creates for you. And obviously we want to minimize stress. So what I plan to do is to keep these notes that I have that I observed during price action. And I'm probably going to read through it day after day and just really take note of what reoccurs a lot. Right? So if we have 10 different trading days and we have 10 different notes, I'm going to look through those notes and just try to copy and underline what repeats and what I see. Because that's eventually, you know, we're going to be able to notice that a lot earlier so that we can actually do something with it. I guess this line right here that I drew wasn't really influential. So we'll just take out that. I'm trying to understand why price came back up into here. Now obviously we had this imbalance here. I'm not 100% sure on why, but could be that this, right? We had this bullish fair value gap that normally if we were in a bullish environment, price would come back into it. Ideally not below the 50% and then keep on going higher. But as you can see, we've failed it. Came back down lower. Price comes back up. And I'm guessing that's why it filled a little bit. Because if we were super bearish as well, we had this sell sign imbalance. Price came back into it. Usually we don't want to see it above 50% and then come back down lower, but we can see that it didn't. It went above it. So it could be that maybe we're creating liquidity here. Maybe we needed to fill this imbalance. So that's interesting. And the reason I'm, you know, trying to figure out what each candle does and why is because let's say we weren't able to enter the market, you know, at this price, right? We had to wait until after here, right? So we want to be able to, I guess, decipher good entry points. Which is a little hard to do, obviously. But I think if you're able to observe price and actually study it, I think it'll just get easier over time. So, well, that's obviously the goal. So hopefully. So let's see, we're hitting almost 12:30 or 3:30. So we'll see what happens at 3:30 o'clock. I didn't even notice this. Right, this is PM's low of today, right? So our PM low, price went up into it twice. Closed right at it, right? We had wicks above it. But I really like how... Okay, so price closed right at PM low twice and failed to go above it. And price then dropped lower. That's really interesting. I think I need to get a new chair. I'm labeling this one since this... I mean, what I'm looking at, right, from left to right, starting from this is what started it. So far, this one was our biggest drop. We have very small ones as well. We have a small one here, super small one in here, but so far this is probably our biggest one now. Move this over here. All right, so that covers that. So I'm seeing whether price, when there's a big drop down, does price want to seek that first, or does it leave it open? Obviously, as we're getting closer to that AM low from today, go back. All right, that's gonna take forever. All right, so that purple line that you're seeing is from today in the morning. Right, so we had our high. This is yet to be taken as well, so we need to take note of that. We can see that we've taken out this AM low multiple times. We have these relative equal lows, but let's see, if 10 o'clock would have closed there. So yeah, that's our lowest low during those 30 minutes. So just for those, maybe people are barely joining, but that's our low right there. All right, so let's see what happens here on this AM low of today's morning range. So far, it looks pretty nice to me, you know. Just touches in and comes back a little bit higher. We don't want to be faked out, you know, thinking like, oh, it hit it, let's take a long now. All right, we don't want to anticipate it. So let's see. Price has hit AM low at 12:30 p.m. So it took around 50 minutes for price from PM high to AM low. I will be right back really quick. I'm back. As you can see, we still have 20 minutes left in the market. That was an interesting candle. Since I don't really want to hold trades after the market closes, I think this is where I would move my stop loss. And not necessarily for me to just get taken out, since I will close the trade out. But ideally, obviously, we don't really want to get stopped out up here if it were to come back down here, but we're going to place it right here. And we're just going to let price do its thing. As you can see, we reached the AM high on Monday. If you guys just want to confirm that price level that I did mark out, I do have my live on Monday. It's on my YouTube playlist, so if you guys want to take a look at that and how I drew out these levels and the reason why. Just to repeat it again, when the market opens at 9:30, as us traders, we want to get in the market as soon as possible, right? Because we want to make money. And what tends to happen is everybody's placing their orders at that time, whether it be futures accounts, which is, prop firm accounts. Those aren't really necessarily real money until you get, a live account. But for those that trade options and actually have a live account, a lot of money is getting entered in the market right at 9:30, right? And usually what happens is that the market creates liquidity both, on the buy side and the sell side. So those are two good opportunities to mark out certain levels, and that's what I have marked out here. And don't take my word for granted. This is just what I've seen a lot happen, right? I'm still, like I said, based on the title of this live, I'm still, building from scratch. I've always seen it, but I've never actually, written it out or made it fully presentable. But I guess that's what we're doing now, so. So now what I'm trying to see is whether price wants to go above this AM low, right, of today's. It could act as resistance, so we're also entering the last 15 minutes of trading, so we could expect some volatility. Price has gone above AM low. All right, we can see that candle kind of got sold off pretty nice, but now it's back up. Close above the AM low. That's pretty cool. All right, so the market, we're at 343 before 350. So I think these last 10 minutes are going to be a little interesting. Let's see what happens here. Obviously, in hindsight, like if we were down here, I could have gotten out of the trade, made probably double what than what I have right now, but it's obviously in hindsight. So, all right, that's a pretty nasty candle. So 350, right? So 350 is, I guess, when price really kicks in. And now what I'm looking at now, right? So within here, there's no bullish for rally gaps until right here. Make sure there's no volume imbalance in here. So there is a volume imbalance actually. So we include that. Right, so we can see that this candle went below it, closed below it. So not necessarily that this is invalid, but we'd rather see this candle close inside of it or barely tap it and then go up higher. Let's just keep watching what happens the rest of these minutes. We're really reaching the last 5 minutes now. 3, 2, 1. Okay, so since we're in the last 5 minutes, I am gonna move my stop to the candle that just made that aggressive run lower. And this is where we just let our trade run. Since, you know, usually on prop firm accounts, they don't really let you hold trades past when the market closes. We are pretty close to those relative equal lows that we had marked before. To show you guys, so we had 3 really close lows. I'm gonna make it a little bit to where it's actually at. Right, so we had AM high from on Monday. We've already taken out today's morning high. Or low, I mean. We've taken out AM low. We never went back up to the high, but we do have very close liquidity. And I guess we just keep on waiting. So I have 3 minutes and a half. Obviously, it'd be really unfortunate to see price not come back down a little bit lower, but no, that's what price does sometimes, so that's fine. Two minutes left. 2 minutes left. All right, here we go. Let's see if this candle wants to deliver to those relative equal lows. If not, then we'll close the trade if our stop loss does not get hit. But we do want to take a note of this. Now, right at 355, price had a strong move. Really interesting. So we are gonna exit here. We got really close to our target. Fortunately, we couldn't reach it. But pretty close. Just didn't want to deliver this time. But we did get our... Well, if we think about it, right? This is on a micro account. So if this was a mini contract, which is 10 micros, that'd be times 10. If I were to have done a mini, that would have been $900. Obviously, that's a lot of leverage, so very risky. But we can see that we placed our buy, put our take profit, stop loss, or sell. We took one trade today. 2 filled. We got around 46 points. And yeah. All right, I think that's gonna do it for today. We see that strong reaction higher now into that fair value gap. But if you guys enjoyed today's content, if you guys learned something, leave a like, leave a comment. I'm gonna leave my Discord link in the description of this live and the future video that I'm gonna post soon. So if you guys want to drop or join my Discord and drop a just a comment in the chat, right? We can chat it up in here. But until next time, I will see you guys in the next one. Have a blessed day, guys. Peace out.